Good afternoon and welcome to BizTech's Asian Midday Market Watch on this day, Wednesday, the 20th of March. That year's flying past. I'm Jeffrey Halley and my co-host today is Samantha Voon. Our guest today is Phan Vee Leung, founder and CIO of Track Record Asia. V, as ever, welcome to the show.
Hey, it's good to be here. Let's talk about markets.
Excellent. Music to my ears. Let's get straight into it then and have a look at, as we normally do, what's going on in Asian stock markets. And given it's the FOMC tonight, I think markets are being maybe just a little cautious here. We can see the Nikkei 225 is up 0.66%. Shanghai is up 0.4% after China left its 1 and 5 year loan prime rates unchanged this morning. Yet another central bank off the mark. In Hong Kong, the Hang Seng's up just 0.07%. Australia, which sees the ASX down just 0.1%. The Kospi is getting a bit of a tech boost this morning, rising 1.2%. In Singapore, the STI is up just 0.25%, with Kuala Lumpur down just 0.26%. V, your quick thoughts on the market moves today in Asia?
Well, I think you pointed out rightly, the market is just consolidating and waiting for the US Federal Reserve policy meeting later today. Just a bit of a tech boost from the positive performance in US stocks yesterday. And of course, Nikkei is just again trading by itself. The Bank of Japan hiked interest rates, but it was well telegraphed, and they came yesterday with a very dovish statement, dovish comments that they will keep easing if necessary, and they will keep purchasing bonds. So the markets are continues to be happy about that, and the yen continues to stay weak. So Nikkei is doing well.
Yeah, we saw the dollar yen rise by over 1% yesterday after that announcement. Sort of a sell the rumor, buy the facts sort of thing. Let's talk about central banks, V. It's a central bank frenzy this week. As I said, we had China this morning, we had the RBA, and we had the Bank of Japan yesterday. But tonight's main event, and probably the main event for the week, will be the US Federal Reserve and the latest US FOMC policy decision, which will come out in the early hours of tomorrow morning Asian time. Walk us through what you're expecting from the Fed and what factors are at play, and should investors be looking for any possible surprises from the Fed this time?
Well, the Fed has been telling us that they are very data dependent. They are holding a wait and see attitude till data confirms that they should be cutting interest rates. The market expects them to, of course, it's almost a certainty that they will keep interest rates unchanged. But what would be important would be the summary of economic projections, which they publish quarterly. And the most important, I think, what the market will be focusing on will be the dot plots, where the dots plot, which is where the individual members of the FOMC committee show their projections of where interest rates will be in a 1 year, 2 year, 3 year horizon. Of course, the longer term horizon, it's just anybody's guess, right? It really doesn't matter where they put it. But the near term forecast will be quite important. The last projections they published was in December. So this is the first one we are getting this year. And in December, they said that they expect 3 interest rates cuts this year. So the markets will be watching to see if they stick with the 3 or move to 2, because we had some disappointing inflation data last week. So I think there's some fears that they will be slightly more hawkish than before.
So watch the dot plot tonight. Samantha.
All right. So let's talk about crypto, right? So the crypto space had a tough session overnight, with Bitcoin falling about 8.5% and other altcoins following with it, as well as Solana tumbling by nearly 13.5%. So were pre-FOMC nerves driving the sell-offs, or were there other factors in play? And should investors also be looking at this dip as an opportunity or a threat?
Yeah. So I think the reason for the fall is there are several reasons for it. One is that we are seeing ETF outflows for the first time in some days. So that kind of spooked investors a little bit. But in the scheme of things, I think we saw on Monday $150 million outflow, and on Tuesday and yesterday we saw around 300 something $1 million of outflows. But you put it in context, last week total inflow was $2.5 billion. So it's still not a big deal. But the reason for the fall in the first place, I think Bitcoin has been suffering for a few days now. After it tested new all-time highs, it's been trading off, and that's partly because of there's a lot of euphoria. In fact, I was getting calls from people who didn't care about cryptos before, asking, "Is this the time to get in?" And usually, that signals the temporary market top, because all the non-players, all the people who don't care before, they're not now rushing in. But as you said, Samantha, it is, I think this dip is an opportunity, and it's also because of the FOMC jitters. People are worried what the Fed will do. So if you have some profits, why not take it, especially when price action is so poor. And even as we speak, we are seeing Bitcoin testing new recent lows. So that's the not recent lows, it's new lows since the all-time highs, right? So even to put it in context, we are still at the level that we started the month with. So it's just because Bitcoin has been rushing upwards for the last few weeks, and the day where it doesn't go up, it goes down. It's a bit disconcerting for most people who are long. But in the longer term, I think we will continue to see institutional investors, pension funds, sovereign funds thinking about allocating to the ETFs, right? We are seeing, especially pension funds from even state pension funds in the US are considering it, including the Bitcoin ETFs as an allocation, as a part of an allocation that they will consider, right? So I think all this will be bringing new money into the sector. We will see short-term, we will see a lot of volatility in the days ahead, especially heading into the halving in April. But overall, long-term, I think Bitcoin is still a buy on dips.
And on your inside trading show that we do here on BizTech Asia, the last time you were on, you were mentioning the digital currency funding rates, and that had caused some short-term moves lower in Bitcoin in particular. Are we seeing any stress in that area at the moment, or funding rates still remaining quite calm?
Yes, it's getting still a bit high, because as it comes off, speculators are borrowing more money to buy the dip, and as long as it stays high, it shows that the position is quite oversubscribed in the shorter term by the short-term speculators. So you're exactly right. We are seeing a bit of a liquidation pressure, but once the liquidation is done, we are faced with once the dust settles, we are faced with the fact that there's still more and more interest from traditional investors coming into this space. So over the longer term, it is a buy on this, but in the shorter term, because of short-term speculators having too big positions and borrowing too much money to speculate, they're going to be punished in the shorter run. Yeah.
V, thanks so much for coming in and speaking to us today.
Yeah, cheers. Take care.
We've been speaking to Phan Vee Leung, founder and CIO of Track Record Asia in Singapore, on BizTech's Asian Midday Market Watch. I'm Jeffrey Halley.
And I'm Samantha Voon.
And this video and podcast will be on our website, www.biztech.asia, our social media platforms, and our syndication partners' TV and radio stations, as well as their websites. Please like and subscribe to our various platforms. Thanks for tuning in today. Cheers.